Hey traders, Steve here and welcome to the Jackrabbit Club. In this video, we're going to take a look at the portfolio for Saturday, October 12th, 2019. If this is your first time here, please make sure to subscribe, hit that like button, and leave a comment if you enjoy the content. Just so you know, you're getting this video, if you're watching on YouTube, 30 to 45 days after it's been released to members. So if you want to become a member and unlock those real-time updates, head on over to jackrabbittrader.com/membership and sign up for our Jackrabbit Club. With that said, let's first take a look at the portfolio. Closed a few trades out this week, bringing our total for October to $1,880 in profit. The four trades we closed are right here. Okay, SPY, we closed half of a hedge. We closed our O, Pepsi, and Raytheon stock, and those took in about $308. So that was a process that we go through where when we're trading under the 21-day moving average, we want to go ahead, take profits off as quickly as we can when we have them, and wait for better opportunities. I sent that email out, or a few emails out this week. You can see that here on October 7th, closed O, Pepsi, and Raytheon, and then October 8th, closed the half SPY put. So let's just take a quick look at that. Basically saying what I just said, anytime we're under the 21 day and we get some pops in our stocks, we want to go ahead, take those prices or take those trades off at those prices and look for better opportunities. So that's exactly what we did in the stocks. And then looking at the SPY puts, we took half of those off on a move down on Tuesday. We were able to take some off at $6. Obviously now doing this video at the end of the day, Friday. Wish I took all of them off, but still have a few. We'll see how we're going to treat those. But we locked in a small profit there, and we were looking for a continuation lower. We never got it. We're actually pretty much timed the bottom here on these $6 exits, and then ultimately now we have two that are, or the other half, as a loser. So all in all, small loser on this trade. We'll see how we're going to handle that, in a few minutes. But with that said, again, realistically, the market rebounded pretty quickly on Thursday and Friday, up almost 19.59% for the year, where we moved a little bit higher this week, but not nearly as much as the market, and that's mainly because of the hedge that we had on. So still trailing, obviously in this sideways consolidation for the better part of the last 2 months, but the market's been wild and it has these big swings all over the place. So hopefully now maybe we're putting in a higher low in the market and maybe we could start moving higher, but we'll see. But for right now, happy with the performance. Obviously wish we were a little bit closer to where the market is, but with the a lot of misdirection in the last few months, I think we've handled it pretty well, and we're staying right towards the highs in the portfolio, which is exactly what we want when the market gets a little crazy and wild. So with that, let's take a quick look at the market cycle. And actually, I'm going to take this off because we are going to change to a green market cycle because we're back over the 21-day moving average. All right, but I have some major concerns. All right, this is not the kind of bar that to me tells me that this market is ready to move higher. Okay, this bar is an exhaustion move to the upside. Okay, and obviously, it's a Friday afternoon. It's a holiday weekend. We have Columbus Day here in the U.S. On Monday, markets are closed. So, it's a really difficult bar to really get behind and say, hey, you know what? I think this market wants to continue higher. To me, it's almost like I want to hold my short position in my SPY hedge until we break back over 298.80. All right, till we get back over those highs. Now, whether that's the right move or not, I don't know. That remains to be seen. But again, if we go back in the past, I mean, you see these big topping bars, as we get back over the 21 and it continues lower, right? So there's some precedent here that to me tells me, I'm not too keen on saying that this is the move that even though we're back over the 21 day, that's going to take us higher. Now, obviously, come Tuesday, we could very easily just open up and just continue higher, break back above 299 or 298.80, and be off to the races. That's very much a possibility. The 8-day comes back over the 21-day. We have the crossover like we've had so many other times in the past to confirm that upside move. But there's also a lot of misdirection, and specifically if we go back to this time last year, okay, we had these moves that went right back over the 21-day and then broke back down, right? Up over the 21-day and broke back down. Okay, so we just got to be aware of that going forward. But again, for right now, I am going to change this to a green market cycle because per our rules, we're back over the 21-day on the SPY. And the rule here is once we're over the 21-day, that green market cycle means hedges come off, and which we've pretty much done over, going into this week. But hedges are supposed to come off, and we're supposed to add risk. I think for right now, where we're at with the amount of risk that we have on the table, compared to the half of a hedge that we have on, I'm okay keeping that on right now until we see a break over 298.80. All right, that's the way I'm going to play it and see if we reverse back down. I'm not adding any new trades this week. I'm going to send out our email this week, and we'll go over them. But there are going to be 4 new trade setups. I'm not taking any of them for my portfolio. If you guys feel differently, then by all means. But again, just that type of candle that we see here, it's just not what I like to see from a market that ultimately should be moving higher, right? So again, we couldn't take out this week's high, came back into it, right? Remember we talked about everything consolidating last week in this range between 298.50 and 284. Well, sure enough, here we were, came up, hit the highs, pulled back lower, and now we're still in last week's range. So very possible that this is just a little bit of a short covering rally before a long weekend, and ultimately we go back lower. Obviously, that's pure speculation at this point, but looking at this from a technical perspective, I would have much rather seen us take out these highs and close above 298.50 before I would have said, hey, you know what, this market maybe wants to go back up. So if that's what we're looking at from a weekly perspective, from a market cycle perspective, let's take a look at it on the daily. And very similar to what we just talked about, just not loving this bar here on this breakout. To me, it's an exhaustion move to the upside. Buyers got over anxious, pushed this as much as they could, and then lost momentum. Sellers took over, sold it down into the last hour of the day. And then here we are now with this ugly looking, they call it, I think, a gravestone doji pattern. Obviously, there's no reference to this 298.80. Okay, I can't really say that we're at a resistance level at this point. Maybe if you want to make the argument that 297.38 is the lows, from this move, the highs from this move, and we came into that. I'm not really buying that too much. I'm just looking at it from a purely price action perspective. Again, not loving that move there. So we're just going to remain a little cautious. Again, changing it to a green market cycle. Happy that we took half of our hedge off earlier in the week. We'll go over that real quick. And then, took some stock off, took some profits in that. We'll go over that in a minute. But for right now, I think we're just going to hold the course and not really trying and figure out what move is coming next. We're just going to let this play out and see. Do we hold under 298.80 and move lower, or can we break back above it to go to 302? Half a hedge with the long exposure that we have is not the worst thing in the world. And if we move over this during midweek, then I'll send an email and say, hey, you know what? I'm wrong. Hedge is going to come off, and we'll make it up with the long stock position. So that's where we're at. That's how I'm playing next week. But let's recap the trades we made, and let's recap our positions. Again, we'll look at the trades that I'm going to be sending out just so you can see them, but not really looking to do anything this week. All right, so the first one I want to look at, let's head back over to our portfolio. Let's just go back in order. All right, so the first thing we did is we took off half of our SPY hedge. I got in at 518, got out at $6 for a small 15.83% profit, $164 on 2 contracts. And basically what I had seen in the market was, if we go back to the market cycle, we put these on, I believe it was somewhere back in here. All right. Had to move lower. Oh, no, I'm sorry. We put an original position on here, had to move lower, took them off, got the bounce we were looking for, probably put our puts on, in this 292 level. All right. And then came in, had that doji pattern. And then finally on the 8th, pushed lower. All right. We took half off into that move lower. But then we were also thinking that we were going to get a continued move down to the 285 area, 286. All right, so held the other 2. And if we look at it from a technical perspective, you could see came right back up into that 294 level. All right, reversed, gap down, continued lower. All right, and again was looking for a move down to this 285, 286, and maybe even the 282. All right, so we took half off. We're looking to take the other half off. That never happened, and then sure enough, right back to the upside. So those other 2 that we have on, or the other half that I have on, are now losers, and we're going to hold them. Again, like I said, until we're over 298. So glad we took half off. Obviously, wish I would have taken the other half off for another $164 profit, but ultimately, here we are. Have a little time left in them. I think they're Novembers. If I go over to where do I want to go? Account statement. Here they are. Okay. So in at 518, out 269. So I'm down 250 in each one, 48%. But again, they are November, so they have a few weeks left until they expire. But all in all, probably in one way or another would like to get out of those this week. All right, because the time decay is going to start eating into those. May very well come back, test 294, bounce off 294. At that point, I would say, you know what, probably looking to get out of them if we can get a move down to fill this gap at a 294, as long as we stay over the 21-day moving average. All right, so that's how we'll deal with the rest of those. Put hedge position, other trades, closed our Pepsi stock, okay? So this is, again, just part of the process. As long as we're under that 21-day moving average, which we were for most of the week, okay, up until really Friday, we're looking for opportunities to take our positions off, even though we may obviously continue higher. So we did that this week, took half off, or took the whole position off at 138. All right, so in at 136.35, took them out at 138.32. So just about a $2 profit there on those, and on that long position. And here we have Pepsi, again, nothing major, 1.39%, $103. But you know what? When you add 164 and 123 and 103 and 152, it adds up to $550 for the week, and not a bad week. So again, small profits, but small profits add up quick. All right, the other one, which is Realty Income, again got in this one, quickly moved against us, and then marched itself higher. Took the 76 shares off at 77.69 and closed slightly lower or higher than that from our exit. So again, just taking them off, taking the risk off the table, because when we're again under the 21-day moving average, we feel we want to protect the portfolio and take off risk when we can. And last but not least, Raytheon was probably our worst exit, taking them out at 194.09 when the stock then finished the week 198.72. So we left about $4 on the table there, $120. It looks great. I love the way this position looks. I would love to get back into this position, but if it doesn't happen, it doesn't happen, right? And again, it's what we talk about. You have to look at these trades as, there's no perfect trade. We're just here to make money. We made money on these trades. We didn't trade them perfectly, but we made money. And at the end of the day, maybe it gives us an opportunity to get back in. Maybe it doesn't. But if it doesn't, I'm sure there's plenty of other trades that will gladly let us in when the time is right. So those are the trades. That's how we took them off. Let's take a look at the other positions that we still have on. So Adobe, all right, continues to flirt with that 271 level. You can see it came down 3-4 times right into that level. All right, and it's bounced higher ever since. So stop is in the right position. Any move lower will get out of that trade. ALL, this one I screwed up last week, guys. I know I definitely screwed up. I said we had some positions reporting earnings. I was on the wrong week. We had nothing report earnings this week, but this week, the week of the 14th, we have JPM, CSX, DHR, and STI. So we have 4 positions that will be reporting earnings. So just be aware some additional volatility in those names this week. But, and again, we don't really trade around them. We don't have any giant profits on these. So just, stay the course as far as I'm concerned. But just wanted you to be aware that we do have earnings, and I screwed up that last week, thought that we had earnings. Anyway. ALL just really moving sideways since our entry. AME came up, hit the 91.80 level, pulled back, now put in some some wicks to the downside. When I say wicks, it's just a move down in the candle and back up, so you get that long line. Basically, you have to always think about exhaustion from which side of the move. All right, so here sellers pushed it down, buyers bought it up. Sellers pushed it down, buyers bought it up. All right, so and we're still holding that uptrend line. Comcast, similar situation to the SPY. Would have loved to see this close back over 45.73, which is the high of last week's bar. Couldn't do it, but is holding the uptrend line. Let's see what happens here. Stop 42.15. If we can get a rotation back higher, we may want to move this stop to 43.60. Costco looking good here. All right, here's that rotation higher. Again, considering where the market is, this should not come back below 284. So let's actually just take and move this. Actually, that's not what I want to do, but I want to duplicate this, and I want to move that stop up. We'll move it to last week's low, and that is able to trail the stop, now taking some risk off the table. So anything under 281.60 now is a spot that we will probably get out of that trade. CSX. Okay, CSX was the trade that we were coming down to this bottom of this channel, moved higher, couldn't get to the 74.60 area that we're looking for, came back down the last 3 weeks, and now this week looks to be bouncing off that trend line support again. So let's see now if we can make a run to 74.60. We'll take some off there if we can. DHR, again, talk about who's on which side. Sellers pushed it down, buyers bought it at support. Sellers pushed it down, buyers bought it at support. So realistically, still in a range, looking for it to break 144.50. Until it does that, we're going to keep that stop at 135. Hilton, consolidating at the support level. This was one that rotated higher, kind of similar to what we just saw in Costco. We moved that stop higher to 90.42, looking for it to go back and test $100. All right, and again, this week was below our support. Buyers bought it back up off of support. Info, okay, this one looks good. Maybe you can draw a tight consolidation here. Maybe we will actually. You know what? Let's move our stop higher in info. We'll do it at like 65. And we're just going to try and keep taking risk off the table. Just because I'm not loving that weekly bar that we had, or actually the daily bar that we had, and the fact that we can't close above last week's high. But if this market is going to have some legs, then again, should not come back below 65.23. JPM, breakout, pullback. Everything this week was inside last week's range. All right, so that's another form of consolidation. If we look at it on the daily, you'll see again ugly looking bar here on the daily chart, right up into resistance, couldn't hold. But for us, our stop all the way down at 105. Mondelez really hasn't done anything since we got in besides go sideways. Stop still 53.60. SNPS, similar situation. If we can get a nice rotation up, maybe start testing this 146 level, then we can trail our stop to this 132 area. For now, I'm going to leave it 125.80 not really doing much on that one. STI has earnings this week, so does JPM, and I forget which other ones we said, CSX and DHR. So again, looking for maybe a move higher. If we can get a move up to 73.20, and maybe if the market is not cooperating, I may just take the whole position off there at 73.20, and just raise some cash here. Not really, I don't know. I don't want to be too biased or try and predict too much. I'm just not loving the way this market's been behaving lately. And, I know there's a lot of factors that go into that. It's hard to put a lot of faith in the market when, a single tweet can take this thing all over the place. But regardless, here we are. Visa, you could see a little bit of a rotation off the support, still holding 71.83, and we'll continue to do that until we get a new breakout. So that's how we're treating the positions. Again, just trailing a few stops, and we don't have to exit anything. But obviously on some of these names, I want you to be aware of the targets that we have, and I can check out. Let's see where we have alerts. Let's open this. Positions. All right, so that's not the way to do it. Let's just go through it real quick again. So no alert there on Adobe, nothing. These are, when I say alerts, these are my price targets. We trailed a stop in Costco. We have a target of 74.30 for half of our position in CSX. Again, ultimate target would be that 79.69 area. Nothing to do there. Hilton, we would want to take half off at the $100 level. Nothing to do there. Mondelez, nothing. What was the other one? SPY, no. Oh, that was the other one. STI. All right, so just be aware of these resistance levels. I know, I go through them fast. Obviously, if we're hitting those levels, I'll be sure to alert you that we're taking our positions off. But, 90% of the time when we hit a target, I'm going to take half off. But again, depending on how the market's reacting, I may just take the whole thing this week. If we can even get there, right? So that's how we're dealing with those positions. And then just to recap, a couple of the trade alerts that we're sending out that you'll see as part of the Jackrabbit report this weekend. The first one is Amgen. Okay, and Amgen, basically, I'm looking at this uptrend is in place. Is more of a pullback trade, right? So we came back, pulled back. I'd like to see it hold this level here at 188.76. Okay, you can see how that not only hits as resistance here, but now is new support. Okay, so a couple different areas there. My first target on any pullback trade, and we'll have a new video out this week, or actually next week, going over how I trade pullbacks. But my first target is always back to the highs. So here, if you wanted to take this trade, you would be getting in at 200, half out at 210, and then see if the rest can run. PSX, let's clear this chart real quick. Okay, so my stop level would be here around 94. All right, and then this is just a large consolidation in my opinion. Right here, uptrend is in place. And then once we know, so here's the breakout, here's the uptrend. Now what are we looking for? We're looking for a couple spots that maybe we want to look to as resistance. The first one, in my opinion, is the bottom of this range up here. Okay, this is another range on the upside here, a larger range. All right, so you have that to contend with. So again, I'm not really looking forward to taking a position at 106, out at 109. But then I'd look at the highs. You have 118, and then you also have 122 as potential exit points. So for me, would pass on that one regardless. TGT, okay, to me, this one's a little extended. If we clear this, here's your support, consolidation, breakout. Not saying it can't go higher, but if we look at it, where the trend line's all the way down here at 92. To me, just a little extended, on the move. Wouldn't really want to see, that big of a position that high up in the range. If you wanted to come down and say 81 could be your support level, maybe I'd buy that. I'm right here, 88.67, maybe even is a better level. But I think there's better opportunities for our money out there, so I'm going to pass on that one. And then the only other one is TJX, and let's clear this drawing. And basically the same thing here. I think this is the most, or the best looking name out of all of them. But the problem is, just not really looking to put that risk on the table. So here, got a couple different options for some stops. Okay, you could use this 49.50 level, or if you really want to get super aggressive with it, you could, let's get the thing to move. No, that's not what I want. You could go up to here at this last week's low around 53, but either of those levels I think are good opportunities. Again, nice tight consolidation, or range, I should say. You can see it's basically finally broken above 56.50. So this would be one that I would probably want to look at, but again, just not really looking to put too much risk on the table here. I'm actually more concerned with the downside than the upside right now. And if I give up some profit to the upside, so be it. But I at least know going forward that I'm going to have some cash to play with when the market finally does turn around. And maybe that's early next week, right? And maybe we just missed out on 4 great trades. So be it. We have, in my opinion, whatever we have here, 12 or 13 other trades that are on that can easily work just as well. So that's how I'm dealing with this week. Again, a little wishy-washy, I understand, but just this, this move here on the SPY, I just don't love it. All right, again, not saying that we can't go higher, not saying, to me right now, I feel like risk is to the downside versus the upside. And we'll see, right? It's a short week coming up. We have earnings starting, so usually earnings are a bullish period. Let's see what happens, right? But for right now, keep the hedges on. As far as I'm concerned, that could again easily change on Tuesday. Let the positions work, and let's see if we can outperform the markets going forward. Have a great rest of the weekend. That's it for this one. Again, if you're watching this on YouTube, hit that subscribe button, hit the notification bell, like the video, leave a comment, and we'll catch you in the next one. All right, take care, guys.